Hi, my name is Chris Punzik. I'm the President and CEO of Ascendant Resources. We are the proud owners of the Elmo mine. We recently acquired this from Nearstar in December of 2016. So we've been the owners now for about 6 months at this point, and we're going through an optimization program. So we are turning this mine around. This was the crown jewel of Breakwater Resources before it was sold to Nearstar back in 2011. And back in 2006, it generated $78 million in cash flow. So it has been a very strong producing mine in the past. Certainly the previous owners had underinvested in the mine, and we're looking to bring in new equipment as well as optimize some of the procedures and processes. When we took over the mine back in December, it was operating at a rate of about 1,600 tons per day. And in April, we saw this rate increase to 1,960 tons on an operating day basis, which is quite an achievement in terms of turning this mine around. In the first quarter, we produced about 13.7 million pounds of zinc equivalent a year. And heading into the fourth quarter of this year, we expect that to be about 19 million pounds. We acquired the mine at a deep discount because, frankly, back in May of last year, when we priced the deal, zinc was trading at 65 cents, and a lot of people thought it was going lower. Now, the zinc fundamentals are quite strong, and we believe zinc prices are going higher by the end of the year and over the next couple of years as inventories continue to fall and mine closure effects continue to impact the supply of concentrate to market. Now, we see a lot of projects that are on offer, but at the same time, they're quite expensive to build. We now have the wind at our backs given the price of zinc and the recovery that's happened since, and that's quite fortuitous. But at the same time, we always knew that there was a lot of opportunity at the mine to turn it around. We put out guidance in April for the remainder of the year. Exiting 2017, we expect that we're going to be producing at an annualized Q4 of 66 million pounds of zinc equivalent a year. The Elmo mine is located 2 hours south of San Pedro Sula, and we truck concentrate to the port on a daily basis, and we ship every other month to ports in Europe and Australia. As part of the acquisition, we signed a 10-year offtake with Nearstar for both our zinc concentrate and our lead concentrate. A lot of the opportunities that we saw at Elmo were quite basic in nature, just getting back to mining 101. It really is a logistics problem, getting the ore from the face to the bottom of the shaft. So recently we've spent money on trucks and scoops and scissors, trying to increase the capital that we've got at work underground. At the same time, we're working on preventative maintenance, making sure that our maintenance scheduling is complete, that our team is what we need them to be, working on the availability of the equipment and the utilization of the equipment. One of the main operational changes we put into place was a hot seating arrangement with the truck drivers, where now we have 4 8-hour shifts that see them changing at the truck instead of on the surface. And what this has done is brought our utilization up from about 15 hours a day to 22 hours a day. And that's had a big impact on getting our numbers up from those original levels to what we're seeing in April. We're targeting cash costs of about 70 cents per pound and an all-in sustaining cost of 82 cents per pound on a zinc equivalent basis. And we think we know how we're going to get there. A lot of that has to do with increasing throughput. Again, by increasing throughput towards the back half of the year, by increasing our head grades through effective exploration, and also just by implementing the mine plan, which we currently have in the back half of the year, should all serve to get us to those goals in the near term. Elmo is a relatively high fixed cost mine. Things like electricity, employment, external services, in the short term are all relatively fixed. And the consumables change up and down with production, but they represent about 20% of our production costs. As a result, big increases in throughput will help our cost reduction efforts. We have other projects in place as well to improve on reliability of electricity. We're also looking at the way that we mine the actual ore, increasing our usage of long hole stoping, getting away from some of the more cost-intensive methods. There's a lot of exploration potential at Elmo, sitting on a land package of about 11,000 hectares. The mine takes up approximately 5% of that, and so regionally there are a lot of opportunities. There are historical holes that have been drilled which have had great showings that just need to be followed up on, but the last 4 or 5 years there's really been very little exploration activity. We see a great number of opportunities in the short, medium, and long term that we can develop that will add significant tons, and these are high-grade tons. The geology of Elmo is such that we have these high-grade chimneys which tend to rise up from a lower flat-lying mantos, and they can differ in zinc equivalent grades substantially. Historically, there's always been a mix in the production from the chimneys and the flat-lying mantos on the order of about 70-30, 70% from the mantos and 30% from the chimneys. Now, this has increased to the mantos because of a lack of development. We are currently increasing our development and are bringing into our mine plan towards the back half of the year some of this higher grade material. And as we explore further, we'll be able to get back to that 70-30 split. The immediate job at hand right now is to rehabilitate and optimize El Mochito, reduce costs at the mine, increase our throughput, and then growing that business organically. But going beyond that, we'd like to take the strategy to the next asset, which we have yet to identify, but that's part of the longer term vision, is to make this into a multi-mine company. 2017 is a building year for the company, but 2018 is going to be a great year for Ascendant Resources.